there, savvy investors! Alexander Ernebach here. Today, we're delving into the world of dividend investing, where passive income reigns supreme. But before we jump into the juicy details, hit that thumbs up button if you're ready to level up your financial game. And hey, quick disclaimer. While we're dropping knowledge bombs left and right, remember, this isn't financial advice. We're here for education and entertainment purposes only. All right, let's kick things off. Now, you might think rental income is the holy grail of passive income streams, and hey, it's hard to argue against that. Property values soaring, rental cash flow covering your needs. Sounds like a dream, right? But hold your horses. Managing real estate isn't all sunshine and rainbows. Let me tell you, it's a time-consuming endeavor. And that's where dividends swoop in like financial superheroes. Picture this. Once you've found the right company to invest in, it's smooth sailing. Dividends become your trusty sidekick, delivering passive income without you lifting a finger. But what exactly are dividends, you ask? Well, allow me to break it down. Companies, much like fine wine, need time to mature. In their early days, they're all about investments, hiring, renting, you name it. But once the profits start rolling in, they spread the love to their shareholders. Yep, that's you. When you own a stock, you're entitled to a slice of those profits. That's your dividend. Now, not all companies dish out dividends, especially those flashy tech giants. They'd rather plow those profits back into the business for warp speed growth. But stable companies? Oh, they're all about sharing the wealth. Think Northwest Natural Holding Company, 3M Company, Altria Group, Inc., some of the OGs of dividends. But here's the kicker. Dividend yield. It's like the cherry on top of your financial sundae. Take Apple, for instance. They're dishing out a tasty 0.53% dividend yield per stock. Translation? For every stock you own, you're pocketing 99 cents. But hold your horses because we're about to drop some truth bombs. Since the pandemic hit, the Fed's been playing the stock market like a fiddle. Stock prices skyrocketed, but dividends? They stayed put, lowering that juicy yield. Case in point, Apple's dividend yield dropped from 1.2% pre-pandemic to a measly 0.53%. But fear not, my friends, because when you're riding the dividend train, you're not just cashing in on dividends. Oh no, you're riding the stock price wave too. Take Apple, for instance. In the past decade, their stock price soared a whopping 1,007%. That's some serious dough. But let's talk about the royalty of dividends, those stalwart companies that have stood the test of time. We're talking about the elite list of dividend aristocrats companies with the longest history of consistent dividend increases. These aren't your average corporations, they're financial fortresses, weathering every storm while rewarding loyal shareholders year after year. Take 3M Company, for instance. For an astounding 66 years, this industrial giant has been upping its dividend game. Currently offering a dividend yield of 6.04%, that translates to $6.04 per share annually. Imagine owning $100,000 worth of 3M Company stocks. That's a handsome $6,040 in your pocket every year, just from dividends alone. And it's not just 3M Company. We've got household names like Coca-Cola, a company that's been quenching our thirst for over a century. With a dividend yield of over 3%, Coca-Cola has been increasing its dividend payout for an impressive 63 years straight. So when you invest in these dividend aristocrats, you're not just buying stocks, you're securing your financial future with a rock-solid foundation. But here's the burning question. How much money do you need to kiss your 9-to-5 goodbye and live off dividends? Well, buckle up, because we're about to crunch some numbers. Let's say you're aiming for a cool $50,000 a year. To make that happen with a 5% average dividend yield, you'd need to invest a whopping $1 million in dividend stocks. Talk about stacking that paper. But hey, before you dive headfirst into the dividend deep end, remember this. Diversification is key. Don't put all your eggs in one basket, even if that basket's as sturdy as 3M Company. And speaking of tools of the trade, a good dividend tracker is a must, and it's worth its weight in gold. If you're on the hunt for a freebie, check out the link in the description. You won't regret it. But wait, if you're just dipping your toes into the stock market waters, fret not. We're here to guide you every step of the way. Join our vibrant community of like-minded investors eager to expand their financial know-how. Be sure to subscribe to our YouTube channel for regular updates and in-depth discussions on all things investing. And hey, if you're vibing with this content and craving more, drop a comment below with the magic word investing. We're all about giving the people what they want. All right, folks, that's a wrap for today. Don't forget to hit that subscribe button and ring the bell to stay in the loop. Until next time, happy investing.